Hey there, traders. Welcome back to live trading and backtesting with me, your host, the 10-minute stock trader himself, Christopher Ewell. I appreciate you coming over from the live stream, watching this here today. We're going to be covering a lot, but I have two requests for you. Over in the chat box, do me a favor. We need to make sure it's working. We need to make sure it's all warmed up and ready for you. Type in your favorite stock of the week. The stock where you were so excited about that you've already bragged about to all your friends and family about how you're the greatest trader. You are the next Warren Buffett. Let's be real here. Tell me that one. Tell me the one that you won your most money on. And then tell me the one that took your lunch money. Tell me the one where you're like, I'm not telling other people about this one because it didn't work out. Do me a favor. Put both of those two in the chat box right now. Let's test it. Make sure it's all working. Get ready. Get set. We're about to get going for today's live trading and backtesting.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell.
Hey there, traders. I am so excited to be back here. This is my favorite time of the week. And Money Mitch booted me last week. He's like, you're not as important as this small cap conference, Chris. Get out of here. We don't need you around here. I see Mitch smiling because he knows what I'm talking about. But you know what? I persevered. I survived. And now I'm back to showcase everything that we're doing over at 10MinuteStockTrader.com for you. We have several people who have joined Proton. It looks like you're ready for Christmas. Or you're ready for a nightmare. One of the two. I'm glad you made it, Proton. Ooh, Walmart. I wonder which way it went. I don't know. None of them. I think Rassicas 83. I think you and I are on the same thing. Igor Bogdanov. What's up, bro? How are you? The Apple. Very good. The same one, LOL. DDS and M. Let's look at Daniel says TGLS. TGIF. How about that? NST Bogdanov. Oh, yeah, I know, right? Dump it. Dude, those are some of the funniest finance videos I have watched like ever. Yeah, very good. I understand the meme there, Mr. Bogdanov. Never lucky. My win was snap puts. My loss was HGen calls. All right, we'll take a look at that. Oh, Clayton, you went to the hood? My friend Mark Minervini tweeting about this the other day. Mark and I actually are friends. So when I say my friend Mark, I mean that. When Hood came out, I think I was even on the show when Hood was coming out. And Clayton, this is not a knock on you. This is part of the process of learning how to trade. You got to give the thing time to work. You got to let it tell you which direction it's going to go. And we had no idea coming out of the gate where it's going to be right here. And then if you had just watched the trend, you could see which direction it's going to go. And in fact, here's a crazy, ugly stat, right? It's at 19.5 now. To go back up to its high at this point, let's call it right there. I know that that's like off the screen. It would have to triple. It'd have to go up 332% to get to that high. Hopefully, Clayton, you didn't enter at that point. But that's one of those lessons we got to learn as traders is don't buy an IPO until it at least has an idea of where it's going to go. So yeah, I actually really appreciate you, Clayton, talking about that. Proton's talking about his biggest winner, Green Mountain Coffee. Biggest loser, ACB. Speaking of coffee, my kids got me this mug for Christmas last year. It's one of my favorite coffee mugs. It says, I like my coffee on the dark side. And like it is so dark that it stains the cup. I don't know if you like it on the dark side, but yeah, I sure do. So yeah, absolutely. I'm excited to take a look at that. Do me a favor, type in the ticker symbol on that so I don't lose that in a little bit. Igor with the AMD. AMD is one of those weird stocks that just like works when it works and doesn't work when it doesn't work. Oh, God. Look at that candle. Imagine if you were short that. That would hurt real bad. And there probably was a lot of people short that, which is why it moved as fast as it did, aka a short squeeze. All right, we talked enough about getting into the show. Now we've had a chance to meet. We've had a chance to warm up the chat box. Let's do this. let's take a look at my opinion on the market. So, as a 10-minute stock trader, I want you to do, you know what? I'm going to do you a favor. You, as of today, right now, because you are here watching this, and several of you I've seen before, I'm going to christen you. I'm going to christen you a 10-minute stock trader just like me. In fact, yes, 10-minute stock trader, just like that. I am very proud to say that I teach people how to trade stocks in 10 minutes a day. Yes, it is as clickbaity as possible, but that is what we do over at 10minutestocktrader.com. And if you enjoy this today, I would like you to do me a solid and head on over to your YouTube search bar, type in 10-minute stock trader, and come subscribe to our podcast here. We have over 10,000 subscribers and 580 something episodes. I am sure that I could probably teach you something that would benefit you. So do me a favor, head on over there. And really, my number one thing I want you to do is watch this video right here that says beat fake trading gurus. This is a webinar I put on a couple weeks ago. This will be up until Monday. On Monday, it is gone forever. This is actually a private webinar that I put on for members of the 10-minute trading room. And I only keep it up for a week so that people can see it. And inside that webinar, I actually had to check my notes there. The secret indicator tells you what's really happening behind closed doors of the stock market. How to get a 90% discount on every stock you buy. Warning, only do this if you like big profits and small losses. And the last thing that we talked about is how to avoid every market crash every time. And that is if you go check out the podcast there by typing in 10-minute stock trader and watch this video here called Fake Trading Gurus. I'm not even playing. It's coming down Monday. I want you to watch it before it does. So let's take a look at the market because I got to tell you, I showed this to Money Mitch earlier. Take the rest of the day off. The whole market's a coin flip right now. Yeah, I don't know if you feel that way, but that's exactly what I've been saying lately. In fact, I have not traded since November 19th was the last day I had any trades on. And if you look at the market, it's gone super sideways. And no, I know it feels like these up days feel like it's up infinity, right? Like today, it feels like you could have bought anything and just taken it to the moon. But keep in mind, it was at this price 2 days ago or 3 days ago. It was at this price about 3 weeks ago. It was at that price since November 5th. This is not a trending market. This is a sideways market right now. This is a huge, huge, huge red flag. We need to see it break out of this base. And additionally, the thing that we are missing most of all is the market breadth. Earlier today, I was looking at this and we were setting 52-week lows on this, under 25%. Now, the way to read this chart is this is the percentage of stocks in the S&P 500 that are above their 50-day moving average. The 50-day moving average basically is a really simple way to tell you if a market is bullish or if a market is bearish. Now, let's do the maths, okay? 29%, so 0.29, times 500 stocks. That means of the 500 stocks in the S&P 500, only 145 are bullish at all. The market can only go so far as the general. The generals can only go so far without the soldiers, who are the stocks, going with them. And listen, I say this every time. I'm not a perma bear, perma bull, or perma anything. I just take the opportunities where they are. The market's going sideways. The breadth is gone. I'm holding cash. I'm loving that cash. If you're loving cash as well, love me the thumbs up button right there on your screen. I know you're looking for it right now. Smash right there. This market it's very disconnected. And my fear, it's not a hope, it's a fear. My fear is that it's going to snap one way or the other, and it's going to snap very quickly. And if I had to guess, it would be down. That's what I've been telling people in the 10-minute trading room is I'm holding out in cash because I don't see a trend. But I do see a lot of stocks that are not performing. And because they're not performing, I'm not putting my money in there. My money is in cash. So that was my main indicator that I wanted to showcase today. If you found that useful, smashy, smashy, smashy. Okay. Let's do this. Since you are here and I don't have any additional trades that I'm looking to put on, I have no new trade setups. I mean, I may be holding cash to Christmas. I don't know because the market ain't telling me which way it's going to go. Get ready, get set, because we're about to do all of our back testing in the audience requests. All right. So let me start at the top. And like I said, I want to look at what you made money on this week, what you lost money on this week. It's not a judgment at all. We're going to have a conversation about each one. We're going to back test these guys, and we're going to find out where, or if the strategy even makes sense. So when I look to back test, I like to keep it super extra mega ultra movie dooby simple. Okay. I like to use one simple line. It's that one line. It's the one simple line on your chart that wins 99% of the time, as you've seen in all the YouTube ads. But no, not really. It does give you some perspective on what's going on. So let's look at Walmart and I'll explain exactly. I like to start with just and only just the 10-day moving average. And the way we do that is we go up here. I use TrendSpider. If you're interested in using TrendSpider, you can use my discount code. The discount code is 10minute, 10MINUTE. You'll get 30% off your plan. Not a sales push or anything like that, but this is the platform I use. I recommend, and I get all of my charting from because I can do the back testing here, right here on the screen. Again, that code is 10minute. Strategy test. And I'm going to do one line, and I'll show you exactly how to do it. I had somebody ask me the other day, and I was like, watch my Benzinga show. I'll show you how it's done. First thing, we need a large sample set. So I'm going to change this to the amount of data that's going to get back tested to 1,000 candles. I like 1,000 candles because that's 1,000 trading days. That's basically 4 years or so. It's not going back to 1986 when Mama Yule decided to pop out this little guy here. It's going back to what is actually happening in the most recent stretch of the market. I think that really matters more. Because if something worked 14 years ago and had amazing returns, but the circumstance hasn't happened since then, and you're basing your back test on that, it's inconsequential. You need to focus on what's going on in this current time period. And I feel 1,000 candles makes a lot of sense. So we're going to add a parameter. In fact, Craig, I'm going to drop you off here just so I can show this better. Add a parameter, condition. Now this condition is going to be price. And we're going to say price close. So the end of day price. That's the only thing I'm looking at here. This is on the daily candles. The end of day price is greater than indicator of the 10-day exponential moving average. It's popping up here because it's on my chart, but you can just type it in real quick, like EXPO. I don't even know how to spell it. Exponential. And on the 10. The 10 is not magical. But I like to use the 10 because it's simple. Now, imagine, what were you doing 10 days ago? I have no idea. Maybe I was having some barbecue. We are here in Texas. Maybe I was smoking a brisket. But I can tell you what price was doing. And I can tell you the average of the price over the last 2 weeks, 10 trading days, and how price is relating to that. So if price is greater than that, that means today it is greater than the average price over the last 2 weeks, which means the price is going up. And the way that trend trading works is you get on when the trend is going up, when it's already proven itself. You're not trying to catch falling knives. You're not trying to predict anything. And you're saying if price is going to go from 5 to 100, you can get on anywhere in between. You get on 27, 43 and a half, 56 and 9 quarters, 69. Nice. That's a good entry spot. But you just got to know where your risk is and where you're going to get out. Because if you did get in at that nice entry at 69, but it goes to 67, and you are only going to risk $2, then you're out. But if you get in at 69, it does go up to 100, you're set. That's the way 10-minute trading works. Now we're going to add a script for exiting. We're going to add the parameter of condition, price, close, oh, hang on, less than, indicator, exponential moving average 10. So in a nutshell, we're saying if price goes over 10, get in. If price goes under 10, get out. And that's the blue line on this chart here. Don't worry about anything else. We're only focusing on the one entry and one exit. So we're going to hit run. And this is long only. You can do long or short. Long, run. So this shows me every time in the past when these criterias would have been true. Okay. And it also shows that right now, this is an open criteria, open posture for this trade, meaning it's above its 10-day. And it'll take these this data down here and plot it out onto the chart for you. So to me, this is like fortune telling. And this is why I'm such an advocate for this. Because I know using this simple strategy of getting in and getting out over and above and below the 10-day moving average historically has given these results. This has happened 88 times in our data set, but it's only had a 32% winner or a 36% winner. And this returns 26.32%. So the way I read this is actually a great setup here, Craig. Walmart over an N2 at the 10-day shows cumulatively a 26% return. That's nothing to scoff at. Let's be honest here. Now, this does say 45% here because that's what happened over the price of the asset during that time. So 1,000 candles to go to now, Walmart has increased 45%. So you might be thinking to yourself, Chris, why would I care about this strategy if it's less than the stock? Because you can't control the stock. The stock may have gone up 46%, but it may have gone down 46%. Because we're taking two separate events. One is the stock and whatever it did, we'd have no control over. And the others are our strategy. That's where I'm looking for. Our strategy, which we have 100% control over. This is the number I care about and what I look at. So boy, I tell you, you got a real lesson from this today. So Craig, with that being said, Walmart was a good one, especially over the last week. Excellent job there. It is outperforming its back test. So yeah, I think you did real good. All right, let's go to Craig's other one here, Apple. Hey, if you're interested in this, go to the chat box, type these symbols in for me. But also keep in mind that I need you to hit the like button right beside where you're typing these in. All right, Apple, actually, I have been telling people I'm a little bit nervous about because this is one of these buy climax that we're looking at right here. But here's the crazy part, Craig. It almost fits in its back test. It's outperforming it, sure, which is great. But I'm a little bit anxious that, as we talked about here, the market breadth. I mean, this dude being the biggest stock out there, being up 3% is the majority of the reason why the market is still moving up while the breadth is going down, because these are market cap weighted indices. I'm sure you knew that. But yeah, it's performing great. It's outperforming its back test. I would just be a little bit anxious because this looks really buy climaxy to me. Lumaz, DDS. Hey, did you smash like yet? I'm just curious. Lumaz, I'm doing this for you. You better smash like. Lumaz. Okay, cool. Check this out. So even though it's not at that point right now on DDS, following the 10-day does yield 114% cumulative return. That's a monster strategy. Now it's not the time to be doing it, but yeah, once it crosses over that 10, I think this definitely has some legs, obviously, if it can follow that same trajectory. And then M. Hang on. No, not DDSM. M. Macy's. I thought that was Macy's. Okay, here's a great one. So following the exact same strategy that we used on a different stock yields us a negative 27% return. So my point with that is that this may be a fantastic strategy for DDS, but you apply the same strategy to a different stock, it's garbage. It's hot garbage. You're going to lose 27% of your money on this. So keep that in mind as you are doing these back tests, as you're figuring out your strategy, because I'm not going to tell you what to do. As you're figuring out your strategy, keep in mind that something that works great on one stock, the exact same parameters on a different stock just may not work at all. Daniel, TGLS, Technoglass. Oh, wow. What happened here? Just trying to look at the news. Anything that sticks out here? Without reading too deep. Yikes. Yeah, this is a monster ouch. And sometimes that happens. Now, this one does show 149% cumulative return following the 10-day. There must have been some sort of news event, not earnings, not dividend. Hey, if you know.
I got you, Chris. It's a short report that was put on by Hindenburg.
You can tell these short reporters to go jump off a not so short bridge. That's what I say. Daniel, thank you for that.
Let's just say they probably had a short on the short report.
Yeah, I'm sure they did. Hey, everybody, I'm short this stock. Come short it with me. Assholes. I'm sorry. Sorry, Mom. NST. Oh, wait. Okay, that was about Bog not being here. Snap puts. Oh, Snap has got wrecked. Has it been lately? Yeah, I knew that this happened. Check this out, though, right? Even though Snap has been wrecked, if you were following this strategy, you avoided the wreckage. And you'd be up 507%. That's a great strategy on this stock. Now, we can flip it and go short, and it's a negative 95%. So, yeah, it's really important that when you set these back tests up, that you make sure you get your parameters set up correctly, and then just play with it. At some point, you're going to find something that works really well. So, yeah, you outperformed the downside on Snap big time. And then HGen. Come on, fingers. HGEN. All right, so HGen calls. Yeah, I can see that. HGen's been trending down. So do me a favor, Never Lucky. I want you to be lucky. Go to your charts. Just throw on any old moving average. I like a 10-day exponential moving average. If it goes below that point, don't initiate a trade. Just stop there. Now, this has a negative 13% return. So that means even if you followed this strategy, you would actually lose money. But yeah, let that be a nice little filter for you. If it's below any moving average, you pick it. I don't care. If you see it below there, just move on to your next trade. You don't have to trade it. I'm running out of comments here. Oh, there they are. Okay, cool. They hadn't loaded. By the way, thank you for in the comment box just blowing it up there. You guys are awesome. You'd be even more awesome if you smash like. I'm just saying. It lets Benzinga know that you like this. I'm not doing it for myself. I literally do not care if you hit like, but it lets Benzinga know that you like this. It's not going to hurt my feelings. If you hit the dislike button, though, that'll hurt my feelings real bad. You know, as an internet personality, when somebody doesn't like my stuff, my feelings get hurt real bad. No, not really. It's fine. I just know you like were a centimeter over from the like button and you just hit the wrong thing. It happens. No big deal. Happens to all of us. All right. AMD for Mr. Bogdanov. 227% return following the 10-day. Now, this just closed over the 10-day today. So if you are going to follow this strategy, tomorrow would be your entry point. I'm not giving financial advice or trade recommendations, but if you followed this strategy, the initiation of that would be tomorrow morning on the open. You do you. I'm not telling you what to do, Igor. All in cash. I like that. That's literally what I'm doing right now. I need the market to work. Razzacast says, very interesting. Thank you. I appreciate that. This is what I do. This is what I teach people how to do and what I talk about on the podcast all the time. TQs. I used to trade leveraged ETFs as well. And then I realized that they are designed to eventually go to zero, I believe is the case. If I scroll out, or is this is Ultra Pro? Okay. So this is the triple. I thought it was the inverse. Yeah, I mean, it's fine. But here's the deal. I am not an advocate for trading leveraged ETFs. By their very nature, a a down day will work in a greater percentage than an up day will work. That's how math works in these. And this will eventually not work for you. So use this as a short-term vehicle, Eric, but don't intend to keep this for a long time. But the strategy definitely works. 248%. Bam. Hydros. Oh, I'm running out of time. I just checked my time down there. All right, bam. 77% return. Yeah. Just following the 10-day. Now, again, this one just closed over the 10-day today. If you are following the strategy, tomorrow on the open is the entry point for that. I'm not telling you what to do, but I am saying if you follow the strategy, that would be the occurrence. All right, so I'm going to do one more. I'm going to do one more. Who's it going to be? The first person who pops into the chat box is who it's going to be. You ready? You got 5 seconds. Type it, type it, type it, type it, type it. Even if you typed it in earlier, I need you to retype it right now. Quick, 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 quick. Who's it going to be? I know there's a delay. I'm trying to stall for just a second. Hang on. Who's it going to be first? By the way, thank you guys for throwing in all this chat. Santa stays long and strong. FDX, Super SPAC Man. He did it. Good job, Super SPAC Man. FDX. All right. So, oh, wow. Great example. Super SPAC Man, clutch. You get a gold star. Good job, sir. This is a fantastic example of a strategy that does work in other stocks, fails miserably in this stock. Negative 47% return versus the stock going up 28%. Now remember, interpret this the right way. This doesn't say that the strategy is broken. It says it doesn't work for this stock. So then it's your job as the trader to come in and say, okay, so Chris was talking about backtesting, and he was saying that the 10-day doesn't work for this because basically I'd lose half my money if I followed this strategy. What could I do different? Let's try the 20-day. Try the 20-day, Super SPAC Man, and hit run. Hey, you know what? Negative 31% is better than negative 40%. I think I'll keep playing with this, right? So that's the mentality you need to have. That's why I'm such an advocate for testing your stocks. Because you can see here, trading is not a dart throw. Trading is not a crapshoot. Trading is not flipping a coin. Trading is being strategic. Trading is understanding how the market works and then working with the market. I'm not the first person to figure this out, but I do hope that I am the first person that's come across your desk today that you can learn from. Now, I have one more quick section that I'm about to do before Money Mitch literally stops my stream so he can take over. My final thoughts. Don't feel bad. You will always have another trading opportunity. Be a sniper, not a machine gunner. I was sharing this inside of our 10-minute trading room today because we haven't traded since November 19th. Strategically so. Don't feel bad. You will always have another trading opportunity. Be the sniper, not a machine gunner. There will be a day in the very near future where the market decides which way it's going to go. And when it does, I'll be there. I hope you're there too. And I hope you're trading in the right direction. I'm not going to make predictions, but if I had to make a prediction, I'm going to silently draw a diagonal line right there, and you can hear my prediction. That reminds me, the first time I was on TV, I had my publicist, and she was telling me, Chris, it doesn't matter what you say. It's just your opinion. Plus, everybody's going to forget by next week anyway. I'm like, okay, yeah, you're right. That's fine. So thank you guys for coming to today's episode. I really appreciate it. You guys were clutch. You came through and you guys put in all of your favorite stocks this week and all the stocks that took your money. And you know what? That happens as a trader. But the number one key is to keep your risks short. Keep your risk short and let your winners run out of control. That's one of my sayings. And do me a favor. After Money Mitch, because I don't want to take you away from this guy, because I love this Mr. Mitch. Type in 10-minute stock trader in your YouTube search bar. Come subscribe. And then before it happens, because it's going to happen on Monday, this video is going down. I want you to come watch this video because it's going to be gone forever. It's a really quick video about how you can beat those fake trading gurus. The guys that can't come on this show because they can't keep a portfolio together. So thank you all for so much for your time. I really, really appreciate you. Have a fantastic rest of your Wednesday and look forward to my main man, Money Mitch, coming up next.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options,